Today's guest on the What Fuels You podcast is Jesse Proudman. Jesse is the co-founder and CEO of Makara, a new investment platform democratizing access to the cryptocurrency markets, and the co-founder of Strix Leviathan, a crypto investment manager powered by a sophisticated proprietary trading platform. Prior to Strix Leviathan and Makara, Jesse founded Bluebox, a cloud computing startup that he led to a successful acquisition by IBM. During his time at IBM as an IBM Distinguished Engineer, Jesse focused on blockchain technology and cryptocurrency applications. With more than 2 decades of experience as a technical entrepreneur, Jesse serves on the board for the Buerk Center for Entrepreneurship at the University of Washington and the Strix Leviathan Nest Fund Investment Committee. Jesse earned his bachelor's degree from the University of Puget Sound and is currently based in Seattle with his family. Welcome, Jesse. Good to see you.
Thanks for having me.
Yeah, thank you so much. Okay, we're going to start with some rapid fire.
Okay.
First things first, favorite cuisine?
Asian food.
I love. What kind specifically? Like anything? Chinese,
Yeah,
Japanese?
anything. Sushi is probably the top of the list, but all of it is fantastic.
Yeah. Are you mountains or ocean? Or
Ocean.
lake, I guess. Ocean.
Absolutely.
What is the best thing that you have read or listened to or watched recently?
Oh, I just finished a book called The Hail Mary, which is by the author from The Martian, that sci-fi movie. Just a phenomenal sort of science fiction. I have read mostly nonfiction for the last couple of years, and so this is my foray back into fiction. It's just been so enjoyable to go to a different headspace.
Yeah, I love hearing what people are reading. What are 3 words that you would use to describe your leadership style?
Oh, that's interesting. That's a tough one.
It is tough because people are like, well, reality or aspirational?
You're right. Yeah, I mean, it's like the reality side. It's probably intense, energetic, and distracted to some extent. To some extent,
Most entrepreneurs are, right? A little distracted.
That's right.
Like squirrel, right? And that makes sense. But you know what? High energy and intense also usually comes along with entrepreneurship.
Yeah.
What's your favorite way to spend time with your 2 kids?
I like being in nature. So we have a boat, and some of my favorite experiences with them have been just out exploring, doing something away from people, away from the house, away from electronics. It's just nice to get out and be in nature.
Yeah. And does your wife co-captain well? I feel like that's like a whole other part of the job.
She does, yeah. Although we had that debate this year. I think we have different enjoyment levels on the boat. So fortunately, my brother-in-law has done a great job stepping up to help fill in the first mate duties.
But I'm guessing that anybody who's with you or married to you or even a close friend in any sort of significant way would have to be kind of into boating, if that's your passion, right? That's your happy place.
Yep, that is my happy place. Absolutely.
Yeah. And tell me, what's your biggest pet peeve?
Oh, my biggest pet peeve.
That's the Debbie Downer question.
Yeah. I think it's people not having patience. I think everybody has sort of their own struggle they go through, and there's this expectation that everything's perfect for folks all the time. This has been really evident. This is the first kind of consumer app or consumer business I've built, and things like App Store reviews.
Yeah, I read them. I actually read them in preparation. You have really good reviews, and then some of the ones that are like just a result of being early in the build of the business.
Right. Yeah.
And it's like, well, this is just kind of how it is. These are natural things, but you guys were really quick and very positive in your response. I was impressed.
Yeah. I really want to satisfy everybody. It's like, yep, the things you're talking about, I very much want to see us as well. It's surprising to me. It's like people forget that there's humans on the other side of the screen, and it's so much easier to just be negative and a downer in digital format.
That's interesting. Has it impacted the way that you deal with people on the other end when you're the consumer?
Yeah, I think so. It's actually been an interesting lesson. We've talked a lot about it at dinner with the kids. Like, just always remember there's somebody else on the receiving end of what you're talking about.
Totally. That's so true. Okay, so if you could have any one superpower, what would it be?
Oh, I think it would be not having to sleep. Time is time is the most valuable resource, and there's so much I would like to do or be able to go explore, and being
Yeah.
exhausted, being exhausted
I
is
know both
never
of
a
us are
fun
both.
feeling.
So what would you do if you had an extra day, or, what would you get up early to do or go to bed late to do?
I know as an entrepreneur, there's this constant challenge between the business, your personal health, your relationship with your spouse, your relationship with your family. It's just constant juggling act between taking care of all of those. And it always feels like there's sort of some plate being dropped. So
Yeah,
a little extra time would
of
ideally.
course. And I always feel like you slightly suck at everything.
Yeah.
No, I totally get that. So where did you first get this kind of bug? Were you kind of a mini entrepreneur as a kid?
Yeah. So my first company I started when I was 13. My folks said I wanted to go buy a Walkman, like a tape player Walkman, or no, it was a CD Walkman, if I remember it back right.
Okay, you're like you're not young enough, or I guess you're old enough. You're not old enough for like a tape Walkman. I'm older than you.
Yeah. So I want to get this CD Discman, and folks are like, nope, you got to go get a job. So I'm looking through the newspaper, like at the Orange or at the classifieds, and there's the Orange Julius listing. I'm like, I really don't really want to work at the mall. And at that point in time, this was so it's been 96, 97, 95, somewhere in there. The web was sort of just becoming a thing, and I recognized there was opportunity to go build websites. So I hopped on my bike and pedaled around town. I think I went to the dentist office first and sold them a website. Here we are now.
So you just
20
walked
years
in and
later.
were like, I'll figure it out. So, hey, dentist, let me build you a website.
Yep.
And how did you figure it out? Who taught you?
Nope, nobody. I mean, that's, I think I'm an experiential learner. And that's the one thing I've really come to recognize about myself over the last 37 years. And just getting hands-on and figuring it out is the best possible way for me to pick up something new. So away we went.
Wow. And did you have anyone guiding you? I guess, like, what were your parents into, and what was your childhood like, other than being an experiential learner?
Yeah, absolutely. So mom's a public defender. Parents are separated. My dad's an entrepreneur doing diversity consulting. So he
Oh,
did run his own business. And so I watched that growing up, but very different industry. And both of them were certainly not into technology. So
yeah.
it's always been curiosity about how I ended up so focused in this specific industry.
Yeah. But you didn't study computer science in school. You ended up going to UPS. Did you grow up in Seattle?
I did. I actually grew up in Tacoma, 2 blocks from campus there.
Yeah.
So I went to the business program. It's called the Business Leadership Program at UPS, sort of a 40-person, higher intensity, single cohort business program. It was great. I dabbled in computer science classes, but again, I think this is my problem, right? It's like having somebody tell me how to do these things versus being able to just go put hands on. Night and day difference for me. So I think I
Yeah.
took two and then ended up dropping that minor and focused solely on the business degree. And I was running Blue Box, the prior company. I was running that through college.
Were you into school? Like, were you a good student? Because I find that I'm interviewing these entrepreneurs, and some are kind of like on this very clear path, but most are not. And I love interviewing from the perspective of, who's listening. I'm not really sure. Is it kids who are feeling frustrated that they're not doing great in school? And then they hear from someone like you who might also have been like not into school. I don't know. Maybe you were into school.
Yeah, no, it's that experiential education piece. I struggled with school throughout sort of my entire educational experience. I did well enough, certainly decent grades, but it was never interesting. Sort of classroom learning is not my style, and have really struggled with the busy work that is so prevalent in a lot of education. And in hindsight, sort of persisting through definitely gave me the grit it takes to be an entrepreneur. Like, you can't just give up when things aren't enjoyable, or you never make it anywhere here.
Yeah.
But from an educational perspective, that was always the frustration. And it's interesting now watching my son. He's going through some of the same challenges.
Well, I was going to ask you like how that translates as a dad, because we all get so focused on like results. And I mean, I don't know if you do, but sometimes it's your kids are young still, but when your kids start to get older and you're like, just figure out the system and just do what you got to do to like get your good grades, it's probably not the right message. It probably should be like, stay curious and continue to ask questions and disrupt.
Yeah, well, that's the hardest part. It's like, again, kind of thinking through that if time is the most valuable resource, certainly education is incredibly valuable. But when my son comes home and says he's bored at school all day and they're teaching him things that he knew from last year, like that's such a frustrating feeling. And so part of it's trying to advocate for him to go find or ask for more intense lessons or whatever it is. But yeah, it's frustrating, and it's just ironic to see sort of the same tendencies that you recognize in yourself manifest themselves in your kids.
Oh, totally. And how would you have described, or your friends have described you in like middle school?
I was the nerd in middle school.
Oh, you were the nerd.
Yeah. I was working, so that sort of bike website experience, that was right around the beginning of middle school.
Wow.
And so spent a lot of my time either building websites, or I was part of the sort of the computer lab at the school itself. So spent time working with the broader IT team in schools. But yeah, I was not the popular kid. I was the nerd.
Yeah, it's like actually the nerdy or whatever quote unquote kids are the ones who are probably going to be continuing to push themselves and do things. So tell me about your entrepreneurial endeavor. You said that you started Blue Box. How old were you when you started Blue Box?
Yeah, so the very first company I started was in junior high, and I ran that company sort of through junior high into high school. And right at the end of high school, that was a partnership with another couple partners. By the end of high school, that partnership had devolved into just two of us, and it just wasn't going super well. I think my business partner and I had differences of opinions on how to pay your bills. I was a big believer in pay the bills first, and I think he was a believer in take a paycheck first. And at some point, those styles start to conflict, and when you can't pay your bills and the finances don't look particularly great, it can create a lot of tension. So right as I was beginning college, freshman year of college, effectively decided to leave that company and part ways. The previous partner took the majority of the assets. I took a small subsection of the clients and the chunk of the debt, and said, all right, I'll just go do this again, sort of on my own. And that was the genesis for Blue Box.
Wow.
So it's kind of funny, so many people start their businesses with some great idea or spark. I started my business knowing that I just owed a bunch of money and I needed a way to pay it off.
Yeah.
And so Blue Box effectively started as a web development company. And then we were running hosting for the sites that we built. So we'd go sell a project, and then we'd run the infrastructure for it.
Wow. And how did you have lots of competitors? I mean, it's such a competitive space.
Yeah, it really is. I mean, it's become even more so now.
Yeah.
And certainly with the rise of Amazon, I think building a similar business today would be near impossible.
Totally. Jesse, how did you guys fund it? And so you didn't have any business partners?
No, when I started Blue Box, it was just myself, and I funded it using any and every mechanism of non-dilutive funding you can come up with. So my credit cards was a big one. I borrowed money from family. I borrowed money from my fiance at the time, who's now my wife. This was in the middle of kind of the last housing bubble, so I was able to take home equity loans on my house. I got SBA loans. Like literally, if you name a source of funding, I probably used it. Outside of venture funding.
And your risk profile is like crazy. I mean, someone who's willing to do that, obviously you're like the true entrepreneur, and you believed in your idea. You knew you had something.
Yeah. I mean, sort of like at the beginning, I think a big part of it was, it's sort of like this debt circus or debt wheel. Like you start raising money to build a venture, and then there's this desire to make sure you can pay that money back. And so you just got to kind of figure out how to make it work. And at the beginning, sort of all of the debt was personally guaranteed. And so, the first $250,000 of debt I guaranteed against the company was pretty scary. But after a certain point in time, you come to recognize, like, I don't have enough to pay this back. Like, sure, I'll go personally guarantee myself for $1 million or $2 million or $3 million worth of debt.
Oh my God.
Because if this doesn't work, it's just a straight bankruptcy. Like there's nothing, there's nothing left.
And when did you have your first kind of big win, like biggest client?
Yeah, so Blue Box started in 2003. That big win was probably 2006, sort of 3 years in to 2007. And we had built a relationship with another development firm that was building websites for MTV. And somehow we convinced MTV to work with us. And it was like, I think there were 3 of us at the company at the time, maybe might have been 2. But that was the first big contract. And that's really, if we go look at the trajectory of that business, that was the inflection point where everything really started to take off.
And at the height, how big did you get?
Yeah, so I bootstrapped that business for 9 years, and ultimately we raised about 22 million in venture. And the company was acquired by IBM in June of 2015. So right at the point of acquisition, we were about 60, 65 employees.
Yeah. And when you got acquired, like, was that kind of the goal, or what was the goal? Maybe you were 18 and not really thinking that way, but
yeah,
you know, I remember reading about it, Jesse, and I was like, "Holy my God, IBM, so huge."
Yeah.
And were you being courted, or did you put it out there that you were open to being acquired? How does that work?
Yeah, so it's certainly when I started the company, again, it was like I just needed to pay back. I needed to pay back the debt that I'd taken, and ironically, to do that, I ended up taking more debt. So, bootstrapped the company for 9 years, and then at some point became to realize, like the economics just weren't working. It's sort of like for every new dollar of revenue we were collecting, our expenses just kept going up, sort of in a linear fashion. And so came to realize we needed some other mechanism to make the economics of the company work. And the thought was we could go raise venture capital and use that to build effectively a product using all of the technology that we had built to power the business. And the hope was that sort of that product would make the company valuable, and that we could drive an acquisition from that product or of that product. And fortunately, that's how it played out. You know, the Blue Box story, it's, I mean, we could do an entire podcast just on that. It was a incredible roller coaster with, you know, 2 near bankruptcies, embezzlement, executive fraud, like all kinds of problems and challenges. And so it was sort of at the very end, it was 2014, end of 2013, beginning of 2014. I basically had come to the conclusion that I was not the right person to continue to run the firm. Like, we, as an experiential learner, you learn by making mistakes, and that costs money in a business. And we were out of money for me to continue to learn on the job. And so effectively concluded that the right path was to bring in a third-party or external CEO who had more experience than I did, could help us make fewer mistakes. And that was actually the impetus for the sale. So sort of bringing him in began to signal to the market that we may be interested in an acquisition. And it started off this whole set of conversations that really lasted about 18 months. And they sort of started about 3 months after he joined, and sort of in the background went on his entire tenure with us until we sold the company.
Yeah. And what was that process like? Were you learning on the job there too? Because if, like, today someone came and said, "Hey, I'm going to acquire you," like for my company, it's IBM, I would feel a little bit in over my head. Like, how do I make sure that this is the right result, and I can continue to protect my team and my culture that I've worked so hard to build? And also, like, knowing you, the little that I do, I would imagine that it's scary to be like, I don't want to be part of the big bureaucracy of like a IBM.
Yeah, I mean, it was the entire experience was one of the biggest roller coasters I think I could ever have imagined. So it started again in the summer of 14, and we were approached then to be acquired. Did the whole song and dance with diligence and conversations with a number of firms, and ultimately ended up with 2 term sheets, and neither of which were sort of attractive enough to warrant moving forward. They just, for sort of once you calculate all the overhead of paying back the investors, it's like I basically would have ended up with, so I mean, a life-changing amount of money regardless, but not kind of what you would envision for
right, especially when you worked so long.
Yeah, 12 years here.
It's not like it's a 3-year deal. It's 12 years of your life.
Yep, exactly. So from that, we ended up raising another round of funding and kind of pressing ahead over 2014, 2015. And then in February of 15, so the conversation spun back up. You know, I think it was 100 days from the very first conversation with IBM to close, which I believe, at least to that point, was the fastest deal IBM had done. And it was probably 100 of the most intense days I've I ever had an entrepreneurial experience. Like they sent a diligence request list for documents, and I believe it was something of the order of 1,500 questions, some of which are sort of yes or no or not applicable, and some of which are things like provide every contract the firm has ever signed in its history. So I think in total, we created 86,000 pages of documentation in about 3 weeks in response to that list.
Wow. These are all things people don't think about. You just read like a GeekWire article and you're like, amazing. Hope it went well, Jesse.
Right. Yep. IBM sent out 65 people to due diligence. Keep in mind, our entire company was 60, and we had 17 of those 60 working on the deal. So we had rented out the basement of the West End, and it was pretty funny because they had all their different business units, separated into different conference rooms. And our sales and marketing guys would be jumping back and forth from the sales, the sales conference room to the marketing conference room. Everybody's just, you wear so many hats in an entrepreneurial endeavor. That was 65 people on site, 3-day in-person diligence was absolutely insane. And I remember getting to the very end, and the gentleman that was running the corp dev team, he came back and he said, the very last morning, we really appreciate all your time. Can you explain to me one more time what you really do? Like, what does the company do? And we're like, oh no, this is all for naught.
Oh my gosh.
But we pulled it out, and we pulled it out. And sort of in every acquisition, you talk to anybody that's gone through a transaction, they'll tell you that the deal died multiple times sort of before it finally happened.
Yeah.
Even the morning we were supposed to close, I think I was at the office until 3 or 4 in the morning. I went home, I slept for an hour, and then came back, I think at 5 or 6. And it almost died on the vine that morning. And there's sort of all these little issues that can crop up at the very end. And
oh my God. What advice would you give someone who's going through this right now? Like, what did you learn from that experience?
I think it's very easy. So the mistake I made the first go around in 2014 was sort of having this belief and vision that the deal was done before it was done. That's right. You begin to get into these processes, and certainly before valuation numbers are talked about, you can sort of think about your life post deal, whether that's sort of the things you can build within the company, or it's the things you can do personally. Sort of your brain just naturally goes there, and when deals fall apart, as they inevitably do, that can be incredibly traumatic.
Yeah.
And that summer of 14, when those deals fell apart, that was one of the hardest summers I think I've had from just a sort of a mental health perspective.
Yeah. And so in a way that like you were having kind of anxiety and like panic, or more like depression, or more kind of apathy, like burnout?
Like all of the above. I think when you go through those acquisition processes, it's like the sprint at the end of the finish line. You're sort of putting everything you've got in the tank into it, and then to have it fall apart. It was all of that. It was burnout. It was anxiety. It was depression. And
lonely. I'm sure loneliness too, because like, who am I talking to about this? A, I have to keep things kind of quiet, and B, like, you don't want to burden your wife, who would probably normally be your go-to, and your friends are like, really, it's so hard to know who you could talk to.
Yeah, I mean, that was probably the hardest piece about all of it, and really for me, it was being a member of EO at the time, Entrepreneurs Organization. Like, that's what saved me, just having that cohort of folks that at least listen, and at least can listen from a place of sort of understanding.
Yeah,
you're exactly right. You can't, like, your friends don't care.
Yeah. Or your friends might be like, who aren't as successful, might be like, wah, wah, like, cry me a river. Like, you might make millions of dollars, or you might not, but you're still this kick-ass CEO. It's just hard to know what people are thinking. And at the same time, the stress and the anxiety are real, and they need to be validated.
Yeah, I mean, it goes back to sort of the point we were talking about at the beginning. It's like you never know sort of the battles that everybody fights behind the scenes, and it can seem like things are so easy or have gone so well for so many people. Yet the reality is sort of everybody's fought their own struggles through their whole journey, and it's just I think particularly in the startup world, like this is the result of the way the tech media has covered companies for so long. It's
totally.
They cover the big funding rounds. They cover the acquisitions. They cover all the great top 5% of things. Yeah. And behind the scenes, behind all those curtains, everybody's having the same set of problems. Nobody's business is perfect. Everything's always in this state of nearly falling apart. And sort of that, it took a long time for me to realize that reality is something that everybody deals with.
Totally.
But it's not talked about.
It isn't as much as it should be. I completely agree. So what was part of that acquisition deal that you had to stay on for a bit? And how was that transitioning your team and integrating them? And I guess you ultimately left. Was that part of the deal that you would just kind of stay on for a little bit?
Yeah, so I had an arrangement to stay for 2 years. I actually ended up staying for 2.5. The first year and a half, I worked with the integration of Blue Box into the broader IBM cloud ecosystem. So when we closed that deal, I was so excited. And I thought there was a massive opportunity for what the technology and the product we had built inside of IBM. I thought IBM could help with distribution. Our problem always was, as a small Seattle startup, the companies we were selling to, I think had concern around sort of the viability of our business. We were selling a private cloud product, so it went oftentimes to banking companies or insurance or healthcare companies, much bigger organizations than we were. And there was always some question around, is this company going to exist? So right. Being within IBM, I was like, okay, that's a solved problem. Now we're going to have this opportunity to sell this product to a much larger audience. And the challenge that I came to realize sort of very, very quickly thereafter is that being inside of IBM, yes, you certainly have relationships with those clients, but there are hundreds of products that IBM has to sell to those clients, and sort of getting the sales team interested and excited about what you have is almost impossible. And budgets are set based on the success of the sales teams.
So it's a chicken and egg thing.
Yeah, absolutely. And so that was our biggest problem. We could never get the sales teams sort of trained well enough on the product to actually go sell it. And as a result of that, numbers got missed, and then you get resources cut instead of invested in, and it's this downward spiral pretty quickly.
And that was part of your earnout, is like success of the rollout of the integration.
Well, so we were fortunate. We negotiated a deal that did not include a performance-based earnout.
Oh, thank God for you. Because it's like you don't even know what you don't know. And then you get into this huge bureaucratic company and you're like, oh, I didn't even think that maybe I wouldn't have resources behind me. What I would have thought is that maybe some of your clients would be thinking, as much as the first round was, hey, are they going to be around? Once you're with an IBM, it might be like, hey, am I going to get any attention? And, do I even want to be working with IBM? So big.
Yeah, that's a good question. I think we had pretty good customer retention after the deal. And a lot of that, we were able to staff up the team in a pretty considerable way, which was great. We got to do things and build product in a way that we didn't have access to prior.
Yeah.
We also had to build it sort of inside of the regulatory constructs that IBM is required to release products under. So a lot of benefit and a lot of challenge is sort of within that environment.
And was it at IBM that you started to kind of dabble in this whole crypto world?
It was, yeah. So after that first year and a half of trying to integrate the product, ultimately it was decided that the product effectively wasn't going to receive the attention or focus that it had at the beginning. And I started to go look for other roles inside of IBM. I have a lot of respect for that firm. I think it's a phenomenal sort of institution. So much of what IBM Research has created has led to sort of everything we have today, right? Like there is a lot of history there, and it was neat to be a part of that. And so just because sort of our product didn't work out, I wanted to see what other opportunities I could find within the broader organization. So I went over in 2017, was working with IBM Ventures, and the hope or the plan there was to launch an accelerator focused on crypto. So we had this belief that IBM sort of struggled in the startup community, right? They didn't have the same reputation that an Amazon or a Microsoft had. And my thought was there was an opportunity to build this unique accelerator that could match startups with IBM clients. So IBM clients are always looking for innovative solutions to their problems, and startups looking for introductions to prospective clients. And if we could act as sort of that matchmaker, it felt like a way to build an accelerator that was quite different from what else was in market.
Yeah.
So my job over 17 was to research the crypto space and prep to launch that.
How, again, another thing that's like, I know you're an experiential learner, but we have several crypto clients. I've had guest speakers come in. I've listened to podcasts. It's hard for me to continually attempt to wrap my head around this whole crypto blockchain world. And I know that I don't want to miss the boat. Like, I feel like that's how everyone feels. And so you left and you took some time, right?
No, it took no time. Actually,
Well, because I was trying to figure that out. I'm like, okay, so you leave IBM, and then was there a gap there between leaving and starting Strix Leviathan?
nope. No, sort of the idea for Strix was a nights and weekends project over Q4 of 17.
Got
and
it.
then, yeah, so I left New Year's Eve of 18 and started Strix sort of on the 1st.
Oh, geez.
So
How did you name it? It's such a long one. I'm like, I feel like I got a tongue twister there.
Yeah,
Where'd the name come from?
So Strix Leviathan, it's effectively an owl and an octopus.
Oh, okay.
An owl is sort of always watching, always listening, and an octopus is sort of big brain, multitasking. And our thesis, I mean, I think almost everybody shares a similar perspective on this asset class that you do. It's too hard. And it's a function of everything being named the same thing. It's a function of this foreign language that the industry has created. It's a function of the velocity that the industry moves. But it's also like the industry has opaque fundamental value. And it's not that there's no fundamental value, but the reason you believe Bitcoin is worth something and I believe it's worth something are probably very different. Like we can't point to any formula, or there's no price to earnings ratio that you can say, oh, it's overvalued or undervalued. And so my belief is that as a result of that, most of the price action here is behavioral in nature. It's fear and greed that move these markets. And if that was accurate, then the belief was that those are patterns that repeat themselves in data, and that we could identify those patterns using algorithms, and effectively we could trade a portfolio really with the objective of providing a better risk-adjusted return. So certainly if you went in 2017, and even if you bought Bitcoin at the peak, in December, you're still up today a meaningful amount of money. I didn't want necessarily to have to do that. I didn't want to have to sort of sit through an 85% drawdown with the hope that these assets recover. And the objective with Strix was to build an algorithmic trading firm that solved that problem.
So it's an automated crypto advisor kind of fund. That's Strix Leviathan. That's the business.
Yeah. So when we started Strix, we came to recognize there was no technology for anybody doing sort of sophisticated investment management in crypto. It was a very blank canvas. And so we built that whole software suite. And that does everything for us, from collecting data from all the different exchanges. It allows us to design all the algorithms, to run the algorithms sort of against our live portfolio, to execute all of our trades, to reconcile everything, to generate statements, sort of any and everything you need to run a hedge fund in the digital asset space. We built into this technology platform. And then on top of that, we started a traditional hedge fund, just like any other hedge fund, but it's focused on digital assets. And so we ran that business for the next 3 years.
And then you took the technology. Tell me about Makara and how that whole works. Because as I was researching, I'm like, okay, Strix Leviathan, and then it spun out to Makara. Is that correct?
Yeah, exactly right. So we used that technology for the next 3 years to run the fund, and the fund has done phenomenally well. I'm incredibly proud of what we built there. But we've come to recognize, so as a hedge fund, and we're regulated as a 3C7 fund, which means we can only accept money from what's considered a qualified purchaser.
Which means like what, like a certain amount of investable assets?
Yep, 5 million in investable assets and up. So it's like it goes way beyond accredited investor.
Yeah, and what's the minimum investment?
It's $100,000.
Okay,
on the fund.
And so the auditing process, or the regulatory and legal kind of process of valuing a fund that's in crypto is different than like a typical fund, right?
Yeah, it is. So that was a big part of the technology platform. Like we had to go build a lot of those pieces. Any fund that operates in this space works with auditors. They work with what's called a third-party administrator, and that's the company that goes and effectively verifies the books and values all the holdings. But to even work with firms like that, you need to have sort of your own sets of records.
Yes.
And that's where all of the software that we built came into play.
And so can you say the size of the fund, or is that confidential?
Yeah, we unfortunately cannot share that.
You don't share that. And so when you're trying to access investors, are you going through wealth advisories? Are you going, is it all individual investors, or?
Yeah, so on the Strix side, what's beneath there, I mean, when we started, it was effectively friends of the firm, friends of me, Jesse. Uh, and over the last year, that's really transitioned now to be family offices, to be foundations, to be fund of funds. So it's sort of this institutional investor profile has really transitioned. But all of this, it's like this was the genesis for the Makara idea, right? Like the Strix side of the business, we're incredibly proud of what we've built there, but it is only available to a very specific subset of the investing public.
Right.
And we had so many conversations over the last 3 years with folks that said exactly what you just said, that I don't want to miss the boat, but I don't understand what's happening here.
Right. Like I don't want to miss the boat, but even if I didn't have or have the money, I don't know that I want to put in $100 or $250,000 because it feels still, a little scary and a little random. So I have two questions on that. Well, now with Makara, the minimum investment is just $50, right?
Right. So yeah, so that was like, we basically said, all right, how can we take everything that we've built and create a product that's accessible to everybody and that solves that access issue that makes investing in this asset class a simpler experience, that makes it a more friendly experience. We really wanted to borrow on kind of the notion of a mutual fund or an ETF. Mm-hmm. And so when you go buy a thematic ETF, like say you buy a banking ETF, you don't necessarily need to know all the nuances of every equity that's held inside of that ETF. You just know that a manager has selected assets that they deemed appropriate, and they've sort of packaged them up for you, and that will give you exposure to that sort of segment of the market. And nothing like that really existed for crypto. You had to go and figure out all those individual pieces, and I think it's going to be a very long time before we have true ETFs in crypto. So the question was, how can we build something like that? How can we create this basket of assets that simplifies sort of selection, that simplifies access, and make that accessible to everybody? And that was the genesis of the Makara idea.
And so if I was to go in today, I do have the app downloaded. So if I go in, I know I have to be 4 years old, which it looks like, because I'm like, it said, open to four plus. I'm like, I could get my kids on.
You have to be 18. And this was funny. So when we launched,
well, I know it says 4 plus. I'm like, well, wait, that can't be right. I know you have to be 18.
Yeah. So when we very first launched the app, we had marked it as 18 plus for download. And then we came to realize, like, okay, that's actually used for adult content in the app stores. Like that's the wrong classification.
Well, and so it says 4 plus. So my kids I want to teach them. So let's pretend that I'm sitting with them or your kids, and we go on and we put in $50. Can I specify which crypto, or just it's going into a broad, like where is it going and what are the differences between all the different, and this may be like a 6-hour podcast, but I am curious, where does that $50 go?
Yeah. So if you didn't have Makara and you went to say Coinbase today to go make this investment, you'd be given a list of sort of 60 or so different assets, and it'd be up to you to sort of figure out what are all of these, and they're all named peculiar things. Like, what do they do? So we created this notion of a basket, and a basket is a collection of assets and a strategy, and it's really designed to make exposure to different segments of this market easier. So we have 4 that are available on the platform today. One's called the Universe Basket. This has actually been the most popular, and it's everything that we have available on the platform. It's sort of the S&P equivalent. So if you just want broad-based exposure to crypto, you can put money into this basket, and it uses a risk parity weighting mechanism. So every quarter, it effectively reweights the basket, designing to sort of equalize risk of any of the individual holdings in that basket. So that's kind of, and that was surprising to us that would be the most popular, but people have flocked there the most. And then the other 3 are sort of thematic access. So there's a decentralized finance basket. So that's a subsector of this asset class. There is what we call the blue chip basket. So the largest assets by market cap. And then we have what's called the inflation hedge basket. So that's just holding Bitcoin and tokenized gold for folks that may be most concerned about inflation.
And so people are holding it, and then what has the return been on average, or has there not been enough time to see?
Yeah, so each of those baskets, we're able to effectively show you the historical returns because they're indexes. So we can say, here's the construction of the index, and we can go run that historically. And that's all posted on the website. Obviously, the last year has been very favorable to the crypto markets.
Mm-hmm. What is it on average? And then if there is kind of a return of interest, can that just go right back into the basket?
Yeah, so these products don't earn interest. You're just holding a sort of underlying the investment. You're not buying shares in anything. You're actually physically buying each individual asset. So if the basket holds 10 different things, Makara buys those 10 assets for you on your behalf. And so your return in the basket is effectively the return of how those assets perform in the market. Sort of each basket has its own return profile. I think that the universe basket is 200% or 300% return over the last year. But again, that's certainly it's in a very favorable market condition.
Yeah, of course.
These things can go down just as much as they can go up. But yeah, it's the objective there again was how can we get people, because we think people invest in this asset class not only because the gains are compelling, but because they're curious, right? And
totally.
Sort of that curiosity, that there are so many segments or sectors now to this asset class. So people could be curious about decentralized finance. They could be curious about Web 3.0, sort of building this new place to run applications. They could be curious about the metaverse. Like that's been a very hot topic lately. So bringing together things like NFTs and gaming and sort of digital.
I've been hearing a lot about that. Yeah. So I know you're not trying to give investment advice. That's a disclaimer for sure. Yep. But I am curious if you have a sense of kind of what the global impact of crypto is going to be in the future. And also when people are investing on average, like what percentage of their portfolio are they putting into this? Are they all just kind of dipping a toe in? Or are there people who are like around you who are quadrupling down on this asset class?
Yeah, so I think I'll answer the second. I mean, it's a personal preference, and everybody's doing sort of what's been comfortable to them. We certainly know people that have put uncomfortable percentages of their net wealth, and we know people. I mean, a lot of the Makara clients are just experimenting. They're beginning to kind of understand the broader landscape. I mean, that's the neat thing with a platform like ours is that it makes it very simple. And so almost half of our clients become repeat depositors. So they start with a small amount of money, and they just add a little bit to their portfolio on a regular basis. Which we think it makes a great amount of sense of how to participate in this asset class, because you never know. I mean, here we could go up tomorrow, we could go down tomorrow. And so sort of just adding consistently feels like a very responsible way to participate. In terms of where this asset class is going in general, if I go back to 2017, there was sort of this existential question, like, does this asset class continue to exist? Like, is there a reason for crypto to exist after sort of its big pullback in 2018? And what I have come to recognize is that these sort of the use cases, the applications that are being built on top of these networks, that they're fundamentally, like, there are applications that have been developed here versus kind of everything that was fluff. It was all noise in 2017. Like the world of decentralized finance has created true use cases for these underlying blockchains. The world of NFTs, like we're seeing all these brand new things be developed, and as a result of that, we've seen sort of this big shift in institutional interest. Right, Visa just bought their first NFT over the last couple weeks. So the question that we ask ourselves is, like, does this go away? And I think this entire asset class, the way I like to think about it, it's more akin to liquid angel investing. Like, this asset class, in my eyes, will exist, but to say any one individual asset in this asset class will be the most successful, I think that's sort of a fool's errand to try to pick any individual thing. But if you can agree that by in aggregate, the asset class will be successful, and you can diversify across sort of a breadth of the asset class, then it's like you're making a sort of a venture bet.
I think this is so brilliant. It's brilliant from the perspective of the fund, and even more brilliant from an accessibility standpoint, that you've decided to build Makara, because my head is always spinning on this. Like, a lot of people are trying to get in, and this is the perfect blend of someone who wants to take some risk and also get in on this, but also slightly mitigate the risk by not kind of doubling down on just one of the 60 on like Coinbase.
Yep. Yeah, absolutely. And then the other exciting thing for us about Makara is this educational component, right? We want people to understand what's happening in this asset class. And there's a CNBC article that came out 2 or 3 months ago that said 1 in 3 investors don't understand what they're holding here. And I think that number is probably much, much higher, right?
Give me a quick little, like, I don't even know what you would say to your kids if they're like, what does daddy do?
What does daddy do? The kids think dad trades fake internet money, magic internet money.
It's magic. It's like Monopoly money.
Yeah. How does that, that's the most exciting piece to all of this, is that each one of these projects, of this 12,000 different projects that exist here, of the 45 different projects that we support on Makara, they're all doing different things. And so our objective is trying to distill down sort of each individual asset into easy to explain language, to distill down sort of each broader thematic area into language that's clear to understand. And I think one of the challenges that this asset class has had is that all of the educational content that's been out there assumes some kind of base level knowledge.
Totally. With describing crypto by using words that have the word crypto in it.
Right.
And I'm like, well, that doesn't help. But
Right.
How do you describe like blockchain and crypto, like as an asset class? Like I've learned, and I feel like the only way you know something is if you can explain it back.
Yeah.
And I always understand it when I'm in the moment, and then I'm like, wait, I can't re-explain it.
Yeah. So blockchain in my eyes, it's about building trust without a single central party, right? So the way a bank works today, I go deposit money in the bank and I trust that the bank is keeping my money and is doing it safe, but that's based on trust. I have to actually trust the bank. And what blockchain has done is for the first time created this notion of provable digital scarcity. So I don't have to trust a bank. I know with proof on the blockchain that my assets or my tokens or sort of whatever I'm holding is there and that I have access to them. And it's the concept of the blockchain, that technology that for the first time has made that possible. Before that, you could never, like, think about it as if you had a picture, you took a picture of your family vacation. Prior to blockchain, you could never say there was only one copy of that file because somebody could make a copy and share it around. You could email it to other people. But you can't do that with assets that are held on a blockchain. They are provably scarce. They are you can prove the ownership of them, and that's the fundamental innovation.
It makes a lot of sense, and it also doesn't. So Jesse, tell me, well, two things. If I've got, how do I sell crypto through the app? Like if I want out, I've now got my $50, I've made my 200%, and now I'm like, I need to go buy something. Can I pull my crypto off the app?
Yep, absolutely. So there are two ways to do it. So one, we have a US dollar basket. So if you just want to be out of the markets and hold dollars for a period of time, you can just move everything into that basket and it takes it out of crypto. The other option is just to make a withdrawal. So the whole platform supports withdrawals back to a bank account or to a Bitcoin or Ethereum address. So we wanted to make sort of leaving the platform, withdrawing your capital just as easy as joining.
Yeah, that's great. And there's no delay. You can do that like right away.
Yeah, so it works in a similar nature to a mutual fund. So when you put your withdrawal request in, there's a once a day trading window. So Makara goes and we'll exit your position and then we'll make that withdrawal for you. And then that capital will be sent back to your bank account. So in aggregate, I think it can be sort of 2 or 3 days just based on, I mean, this is the irony of the traditional banking system. And the funniest thing to me about the entire Makara project is that the hardest part for us here has been getting money on and off the platform. The traditional banking system is incredibly difficult to interact with and has been sort of the biggest thorn in our side from day one. So sort of the delays that exist are not because we can't make things go faster. It's because of the way the traditional banking system works.
Whole bunch of bureaucracy and crazy red tape. And seems a little bit antiquated too. And you're trying to like run this like very progressive, innovative business.
Yep. Yeah. I mean, it makes.
And how many people do you have? Is it just the Strix Leviathan team coming over, or do you have a whole technology? I'm sure you have a whole tech. First of all, I saw that you have a lot of people that worked with you at IBM. Is that right?
Yeah. Sadie, my co-founder, and I, she actually worked together with me at Blue Box prior to the acquisition. So she was our controller at Blue Box. And then we've got a number of other folks
which says a lot about you. Clearly your leadership style works because people are following you, right?
I hope so. And then on the Strix side, so there's nine folks that are focused on that vehicle, and then we've got about 15 folks focused on the Makara product.
Mm-hmm. And how have you funded it? Have you self-funded it? Are you raising money, or how's that gonna?
Yeah, so
how are you gonna scale it?
Yep. So when we started Strix, we raised a seed round back in 2018 and 2019, and that funded sort of the development of all the technology platform. That business is now operationally profitable, and so it's helping fund Makara. And then we've raised some additional capital at the beginning of this year to get the initial product off the ground.
Awesome. And what are the plans? Like, what are the big picture plans for this business? And you're not 18 anymore, so And you've been through it, right? You've been through more than most people your age. So you're well equipped to be thinking about where to take this business. And you're in a unique position to kind of grow something crazy here, I feel like.
Yeah, I mean, this is the first, if I look back at everything we've built, this is the first business that I can really put my finger on and say, this could be $1 billion business. Like
I would feel that.
touch,
I mean, I can't imagine how it couldn't be. Sorry.
Yeah, that we can touch just a huge audience. I think if we truly do believe that this asset class will be a material part of people's portfolios, and I do believe that, then making exposure, making it simple to participate, like that is a huge opportunity. And nobody else has made it simple yet. It's still too hard everywhere else you go. And so sort of the prospective clientele, it's a massive number of people. And really, it's exciting to us to kind of unlock or open the door to this, to something that's too hard and that keeps too many people out.
Yeah, I'm super excited to watch you grow this thing. It's going to be so killer. I love it. How are you balancing it all? Like, how do you keep your mental health in checks? Take time for the boat, take time for the kids and your wife.
Yeah, I mean, that's probably been that's been the hardest part about it this year. I would not feel like I am succeeding in the balance this year in particular. It's been, I think you forget how hard the very beginnings of things are. I think you wouldn't do it again if you remembered how hard it is. And for me, the most fascinating piece has been the challenge to build sort of a mobile app. That's a new domain for me. And then something focused on a consumer, right? The audience, and trying to keep everybody happy. I'm a big customer satisfaction believer. I want our clients to be thrilled with our product. And so I try to do any and everything we can to kind of keep that satisfaction high. And when you're at the very beginning here, that's a significant amount of work. So it's been a long and tiring year.
Yeah. Well, you do have great reviews. I did read them. I think you've got like a 4.8 out of 5 in a business that would lend itself to all sorts of chaos and people getting confused and blaming the company. And I can see that going south, and you have great reviews actually.
Yeah, we're really excited. And there's so much we can continue to improve and build and add. The next couple of months will be really neat.
Yeah, I'm excited to watch. Okay. My ultimate question for you is, what fuels you?
Oh, that's an interesting question. I think to some extent it's this notion of competition or winning. Like it's this desire to achieve, to prove something, to prove that you can build or grow a business, and more so just to myself. Particularly this sort of second go around. I think there's always, from an entrepreneurial perspective, this question of like, was it luck or skill?
Yeah,
and it's always luck. Like there's
totally
you can have the most skill in the world, and without kind of all of the stars aligning, I think you can struggle. But this desire to do it again and to prove to myself that there's the ability to build something great and to build something that can impact and benefit people. At the end of the day, I think people need to think about this. It's a long-term investment. It's you're investing in an entire asset class that really is. I think it will be a big part of the future. And so if people go in with that mindset, I think that there is great opportunity.